What's going on, traders? Hope everybody had a great weekend. Wanted to take some time here and do an analysis of the S&P 500, the Spider ETF, coming into the start of the week. Before we do that, if you haven't already, don't forget to like the video and subscribe to the channel. Make sure you have that notification bell turned on so that way you are alerted every time we post new updates about the markets and trading. And of course, this video is for educational and entertainment purposes only. In no way should be viewed as financial advice. So with that being said, let's get into some analysis here where we may want to engage the market, manage our risk, what to potentially expect coming into the start of the week, maybe towards the end of the week, and how can we best navigate this downside move that we have been seeing in the markets, continued selling and a lot of damage being done from a structural perspective. Overall, first thing, we're starting off here with the weekly chart, and as you can see, we were in our last video we were talking just a little bit about the 20 period moving average here on the weekly, hoping that we wouldn't close below it, and in fact have closed below it here with some authority in the sense that it's about $6 underneath, close underneath that weekly 20. So not a good sign there overall. But before we get into any more analysis, let's just take a quick look at this week's major economic calendar. Some things we might want to keep an eye. Of course, FOMC is behind us now, so it looks like we have a little bit of a lighter docket ahead this week. Not really too much on Monday here. Tuesday, keep an eye on Fed Bowman speaking at 1 o'clock. I will see what they bring to the table. Not too much on Wednesday. Thursday, we will keep an eye on initial jobless claims at 8:30 in GDP. Revision at 8:30 as well, same time, and Fed Governor Cook speaks at 1 o'clock. Now the market will be closed, but looks like Fed Chairman Powell is speaking at 4 on Thursday, so we'll just keep an eye out on whatever comments are coming from him, of course, but luckily the market will be closed. So on Friday we do have core PCA index, PCE year over year, and we will take a look at that. Those all come out at 8:30, but other than that, really not too much. I'll be particularly keeping an eye on maybe wholesale inventories, but not too much there. So with that out of the way, let's do a little bit more analysis here from the weekly perspective, and then we will get into some daily charts and some lower time frames as well. So just from the candlestick perspective, the biggest thing here that has changed, and something that we were looking to see if it would happen during the midweek video, was the creation of a actual weekly downtrend. Now, we were in a daily downtrend, but we weren't confirmed on the weekly because we did not have a weekly lower low. And what did we get here towards the end of the week? We did close and create a lower low, taking out the swing low from August 14th here. So that now we are officially in a weekly downtrend with, of course, our high, our lower high, maybe a soft lower high here, and now officially our lower high, and now we have created our lower low. So this is a big shift overall in the market from a daily downtrend now into a weekly downtrend, and a very powerful candle, as you can see here, with the size of it. One thing we will be watching, though, as far as possible retracements, we will still, of course, watch that 25% retracement. It's going to be the most bearish retracement overall, and I think actually, let me bring that up just a little bit. All right, that's a little bit better to 25%, but we also will be watching our 50% retracement as well. And all of these can happen and still overall be producing just a lower high. Again, I'm not a big fan of any shorts, it's certainly on a swing. trade, but even going to be very extra cautious shorting right now into this downside move. We of course again want to be waiting for a higher low to be produced and the potential rollover like this. But any of these scenarios could take place coming up to that 25 or 50% retracement. And really overall, we could even come back to the double inside bar breakdown, right? We could even come up and retest that area as well. And still overall, that would be a weekly lower high, and we could come up into this and then still just roll back over. So all these scenarios, even if we do see the retracement, we just have to keep in mind the bigger context of what's going on from on that trend perspective. So and that even if we do retrace up all the way up in here, it would all the way up to this double inside bar breakdown. That would still make kind of sense from a structural perspective, and that's also, of course, that lines up with the top of this big area we were watching before that needed to hold for the bulls. And once that broke down, we really have seen that acceleration cascade of selling coming into the markets. But it's very typical, as we kind of were talking in the beginning of September, seasonality kind of playing out here very nicely for the bears. All right, so what else, if we keep on selling, what could we see potentially on where we may start, maybe we might find some buyers finally. And one thing that I will be watching here now, we did have this kind of inverted head and shoulders, or you could even say a ascending triangle. This is what gave us that breakout that caused this rally right here after all this consolidation. And however you want to slice it here, and then we pushed up, and obviously we made that move in the upside. But now if we continue to stay below the weekly 20, and even again if we come up even to 440, we still have a chance, in my opinion, for coming back. It would make more logical sense to see possibly a back test of this 420, 418 area. Maybe we get a little fake breakdown into 415. So this is a big area we want to watch. It's you're never gonna have a level hit right to the number, but this whole zone here is what I'm going to be watching on for a bigger retest of this breakout. So we'll see if we do get some type of move like we were kind of anticipating, where we come up, create a higher low, and then we make this final move down into this general zone, and then potentially we could see a move up there towards the end of the year. But that's all speculation. We'll see if there are actually buyers come in here. Maybe they come in sooner, but we will see. The other reason why I'm not too keen on any, I'm going to be very careful on the shorts. I'm not tracing this downside move. We'll take a look at this from a daily perspective. But before we do that, let's just pop a little fibs on here just to kind of see where we're at from that point of view. And let me take this off. Okay. All right, so let's come down. Let's do a little quarterly action. Let's come down here from March. And we'll come in here, and we'll see here on the daily, we're going to be watching this bull flag that broke out right here. You can see we're right near the 38.2 here from this perspective, one of the last stands for the bulls. So we're going to be watching this 429 40 area, 429.50, a big area where we could see some buyers, and we also have a this area lining up with the highs right here as well. So nice area where we could potentially see some buyers start to step in for that counter trend rally. But either way, these moves are counter trend rally, like we just went over. It can even price can even come all the way up to retest the double inside bar breakdown, and still overall be creating a a lower high, excuse me, and give us the potentiality to continue this weekly downtrend in its direction. So we will be watching that, but this is a great sign here just to be extra careful. Just as we come into this big area lining up here, so we got to be extra cautious. Wait for the retracement. Don't chase any moves in any direction, down or up. Let's look at it. Okay, so we have the fib on here, and let's actually throw in. Let's throw in a bigger picture fib from the swing high. See if we get a little extra confluence. All right, so look at this. If we bring the swing, if we bring it from the all-time high down to this swing low, we also have double confluence right here. Okay, again, so another area that's very interesting and that we want to keep our eye on. And again, that whole 429 area really stands out with some confluence. I think that's the 6. Let me see which one that is. I think it's the 618. Yep, it's the 618. So interesting confluence there that we want to keep an eye on this level. All right, so let's start to take a look at some daily charts now. Let me take this off. Actually, we can leave that on. That's fine. Let's come into the daily from this perspective. Okay. All right, so of course here we broke the megaphone trend line. We've come down, and here's again. We're watching. We're going to be keeping an eye. First step. Now we're going to be watching that gap, of course, right? And I don't have it marked off on this one, but I will fix that. First thing that we are going to be watching, though, as I was mentioning about being careful shorting this hole here, here this level of potential demand we can see here from the August what is this? No, the June 23rd low, and then we also have the highs here from this bull flag. So we're going to be watching as we're in this area. Again, we're really just looking for, if we do see that counter trend rally, you can participate it with with lower expectations, or you can just wait for the retracement to come into short into a key level. So there's two ways you can play it, or you can try to play both. But just as far as opening up a short right at the end, thinking we're just going to continue, that's going to be a very, very risky move and likely to lose your shirt, especially if you're not careful. So let's watch to see how the top of this, this bull flag here holds this whole area here in 431.40 down to 428, 428.75, 80, 429. This whole area. Let's see how it holds up coming into the first half of the week. And watch for that potential retracement back up to the upside. But we will keep an eye now, the daily lower high. And then let me, I got to go back to this chart. The daily lower high, okay, we can do it here. Let me just take off these fibs. The daily lower high would be the gap fill. So let's just mark off our gap to see, if we get into it, we want to keep an eye on that. If we start to get over 436, that's going to enter us in the gap. And whoops. And then we've got the potential room. I believe it's around 438. So that's going to be the daily. lower high. And as we watch, and we're going to see how this develops, that might actually turn up to be nice complements with the daily 9 as this moves down. So this actually might line up and really provide 2 levels of confluence, 3 if you add in the additional daily and overall downtrend for a short move if we do start to fill that gap and come up into it close to the 439 area, maybe if, potentially swinging 435 puts or something like that, monthlies. That could be a trade idea that could work out after we fill that gap and come into it, if we do. We, of course, as we were going over earlier, the possible paths we could take as far as those retracements, and all these things could still, be potential entries. We could only come into here and then roll over and do an H. Or we could come into here, just like we were talking about before. And even the double inside bar, you can't see it here on the daily, but you can even come down all the way into this area here. And it still is a bearish move. And this is pretty much that inside bar breakdown. So, some different ways to consider the short, but the other thing, we were talking about as well, and I kind of did post about this on the Twitter. We are going to be watching, this M pattern overall that pretty much is playing out before our eyes here. Typically a bearish pattern taking place, and here you can see the swing low being taken out and us closing here on that lower low now overall. But if we do actually start to break the top of this this bull flag, we'll be looking for the bottom of it. So that's going to take us down to 425, 425.50, 425 area. That whole zone will be the next area I'm going to keep an eye on. But if it is broken, what do we have here? A little bit of a gap fill potentially, and we could come into that 422 area, 420. Once we start to get in that 420 area, that's going to be what we were talking about earlier from that weekly time frame perspective, that 420 to 418 zone. So we'll keep an eye on that. And it's actually interesting here, at least on the 1 year daily chart, that gives us lines us up with the value area highs here, pretty much. So that's interesting. All right. I think that's pretty much everything I wanted to go over from a daily chart perspective. Let's take a look here at some other views, and then we will move on to some other charts on smaller time frames. Let's take a look at this bigger picture, see if there is anything we can take away from that. I don't think that there is. Just looking offhand here. Nope. No. Nope. Okay, I got something here that I do want to take a look at. Let's look at this from a daily perspective. Now, and actually you can see it kind of nicely on the all right, so we've got this channel here that we are watching, that we have traded in here for a while. You can see as we've traded up and down into it. And then we've got this current weekly downtrend now that we are watching. But where, again, when we're talking about where we could potentially end up finding some buyers, we want to see now if this is, right, and you can kind of really see it clearly from a zoomed out perspective. What if we take this point of view? What if this is a big bull flag kind of being formed, giving us the flag here, just basically this channel, and then we've got here and here for our flag, right? and you can pretty much already see that. All right, so if we have a flag here, it's got to hold for this bigger picture bull flag potentially to be true. It's got to hold this potential trend line, and if we come in here, and where's that going to line us up, right? If we do sell down into the start of October, that again is going to start to line us up with the 420 area, 422. Anywhere in this zone, it's got to hold 423. Of course, we're looking at a weekly time frame here, so it's going to be a little bit bigger. But generally, this whole area is going to need to hold and of course, we're talking from a weekly perspective here. So this is, again, this is another $10 or so, or $12 down. But if we do come down into this area, we want to keep an eye on this channel that we have been trading on. This bigger picture helps give us context, and usually these bigger trend lines have a stronger reaction because they are created over larger sample sizes of time. But if we do come into here, we'll be watching for, again, the opportunity of a potential counter trend rally. But again, it could only come up to the half gap of this current downtrend, and then we could just see the move back down and finally make that initial move down into this weekly POC around that 415. So that's another scenario we want to watch out for. But I thought this was interesting, looking at that kind of bull flag potentiality right here. And I think I was talking about this, and we'll look at it really more from when we get on the monthly chart towards the end of this week. But we can even start to make a case, right? What do we have here potentially? And you can see it here, on the weekly as well, but it's even clearer on the daily. But what do we have here potentially? A cup and handle. So we'll be watching that as well. You can see this kind of rounded bottom, and then let me kind of right, and then we have our handle being formed right here for a potential bigger picture move back up. Now this is a big maybe, but it's just something that we'll be keeping an eye on. So do we see something like this towards the end of the year? I don't know, but bulls certainly have got a lot of work to do before we have that potentiality. But so let's keep this viewpoint though in the back of our minds as we do potentially sell lower. All right, let's get into a quick look at some of the sectors and some other things before we get into the rest of the charts here. Got a lot to uncover here. Overall inflows, outflows of the market, negative, of course, coming down. Not too strong, though. I mean, Thursdays was stronger. I was expecting to see it a little bit stronger on Friday, but really not too much. ADD kind of was hanging out right around that zero line. Nothing really too major compared to some of the other bearish days that we've seen in the market. So this is kind of more of a neutral stance. This isn't that far away from zero. However, overall, the markets sectors were mostly red on a Friday, and what do we have down here? XLY, which I believe is consumer discretionary, just getting hammered from Tesla. Tesla was down quite a bit on Friday, really dragging that sector down, and that's usually more of a risk on consumer discretionary. So we want to see a little bit more strength in that for sure. Not looking too bad, at least on Friday, as from the inflow and outflows here, the volume and the ADD. Not horrible, for Friday, to be honest. So, let's see if we can get over these zero lines, see if we can get some positive advanced decliner action for that potential retracement coming into the beginning of the week. But we shall see. All right, what else can we take a look at here? Let's look at some of the VIX futures. Now, we were talking about this inverted head and shoulders in the last video. We went over here and we said, if this breaks out over the neckline, watch for more downside. in the markets, and we did get that break over, and you can see what happened here. Obviously, we've already been over what's going on in the market, so that played out, is giving us really the clue, the VIX futures, on what potentially was going to lead this expansion of volatility in the markets. But the 9-day versus the monthly, just above the zero line, really not too much to write home about, but still being above the zero line, I would consider that a good sign for the bears. We'll see how that shapes up tomorrow. And VIX 1-day just still showing positive strength for the VIX. So all really kind of in the favor of the bearish move to potentially continue. What I'll be watching here, though, on this one here, is potentially a type of a flag scenario setting up, and then making potentially the move into the zero line, and we'll see what happens when that occurs. So that's something I'll be keeping an eye on, and of course this would mean that the markets would continue down to the downside, but it's very possible, we might see some consolidation for a little bit before seeing any type of move, but we'll keep an eye on how that shapes up. All right, so what else can we go over here? Let's take a quick look at the ratio of stocks below the 50-day moving average in the NYSE here. 50-day not looking good, broke new lows here under the 30% line, so now only 18% of the stocks are trading above their 50-day, looking very, very bearish. But we'll see what happens. It comes down a little bit lower. We've seen kind of markets bounce back around in the 17 area. So another indication that, hey, we might have a chance of a little bit of a counter trend rally to be able to be put in. So we'll see how it's reacting in this area, as we have seen some movements. Some movements in the markets as we've come into this area before. So let's keep an eye, because that's a nice move right there. So that's interesting. But here on the 200, how many stocks are trading under their 200 simple day moving average or above? We're under 50%. We were watching that, tried to peak over. Weakness continues. Now we have only 41% of that, so that is not a bullish environment. We're not really at an area that is really kind of sticking out to me. I mean, maybe here we do, maybe at this 40. Let's see where it is. Yeah, so around this 42 area. So we have a chance here of potentially seeing. We've seen some inflection points happen here before, like back in May and in March, so we'll keep an eye on that as well. Another little clue that we could potentially see a little bit of a counter trend rally, but overall, of course, looking the best. All right. So what else can we go over here? Let's get into some more charts. I think that's pretty much from the bigger picture perspective. I think that's pretty much everything I wanted to go over. Let's take a look here really quickly at some of these bigger picture fibs, although we did go over that a bit. And here we have lost now. We did close under the 50% line. Let's see if they continue to close under that 431.40 area. If they are, and then we were going to be looking for, now of course this is bigger picture, working on the daily, but the next potential target would be pretty much the bottom. It would imply that the top would not hold. It could. The top of the bull flag that we were watching in this 429 area, 429.50 area, hold. But if it gives up, it's going to give us, like we said, and this gives us that confluence. What we said, our next target would be pretty much the bottom of the bull flag. And that pretty much does line up with the 618 here. So we'll watch to see if any buyers come in there, or if we actually do get into that, because that would be the next target if we stay underneath. One thing I will also mention here, we want to keep an eye on the Momo. We're not completely oversold yet. Keep an eye. Of course, it can stay oversold, get oversold, but we want to keep an eye on it as we continue to the downside, because it certainly is getting to a interesting area Oh man, I just moved it. There we go. But yeah, it's not quite there yet. It's just starting to peek into that zone. All right, so let's get into some bigger picture, some smaller picture charts here, and finish up the video. We're gonna take a look here at the day trading fibs really quickly, and then get into some balance zones. Now, I'm not going to move this down to this next swing low. I'm going to keep it in this range for now. But looks like we're just still hanging out in this area. So sure, you know, it's definitely very risky, but you can risk maybe that 430 at the open if we're still hanging out in this area. I mean, you know, even if we are hanging out anywhere in this zone, we can just picture this. Whoops. We can really just picture this as a hourly bear flag. Why isn't this? Oh, an hourly bear flag forming. So, you know, we're going to watch that, and even consolidating up here, this still would be bearish consolidation for the eventual move to the downside. We'll be watching that, but I think that if we get back over 433 here, that's half gap of this range, then we've got the chance to come up into the 436 area, 435, 75, 60. But again, you know, we always want to remember what we were talking about as far as the bigger picture downtrend. So of course, any of these areas we could consider shorting into for moves like that. So that's something you would want to wait for. If you don't want to try to get the long, wait for something like this to take place, and then we want to take that short for the better risk to reward. But if we are able, in fact, to still to get over that 436 area, consolidate, I'm going to still keep an eye on this 437 level. If we can start to get over that, I'll get a little bit more you know, interested to see if we can't start to break up higher, maybe into 438 50, 439, but then we have that big 440 area just overhead, so another area one could consider potentially shorting. But even that 50% mark there around 441, another area that makes sense to potentially go against with the counter trend trade in the intraday sense. But you do have nice confluence there with the 50% retracement as well as the value area low. So that is interesting. And let's just throw out just so we can see where. Okay, I wanted to see if that changed the volume profile at all. All right, let's get into some balance areas here really quickly, and then we will close out the video. So where are we hanging out here? All right, so for this perspective, not really too much actually from the balance point of view. Kind of just hanging out in this range again. I'll be watching really this 430 here to potentially hold. I'm not sure yet. I'm gonna have to take a look, and I'll be looking at, you know, the breadth and kind of some of the internals to see, really make my decision if I want to attempt to take the counter trend trade, but you know, to the upside and then flip short, or if I'm just gonna sit on my hands and wait for the short all day. You know, like I said, I'll be watching to see. We're gonna of course watch you know, the already established swing high from Friday and the swing low. The swing low, basically that 430, anywhere 430 to 429 50 can hold. All right, you can have the chance to maybe, you know, try along. I mean, if the breadth and their other stocks are still kind of, you know, ticking upwards, might have a little mojo for that retracement. But really, bottom of the line, they've got to get over Friday's high, right? And that's going to be recapturing. You know, we did a little fake break there trying to get over Thursday's low. Couldn't do it, but came back, retraced it. So we'll see if they can really get over this key area here for the potential move back up into 435, 67, 70 area. Again, we could consider shorting in that zone as well for moves back into here, maybe coming back up, coming back into here, something like that, if it was that easy of a downtrend to be created. But that's certainly a path price could take. But if we are able to get over the 436 area, 435.70, as we were saying earlier, that 436, I'm going to be looking for a half gap at 437, another area where, of course, we can consider that short trade for the downside. All right. So that's a path that could potentially take as well. But what if we just open up lower here? Again, very cautious on chasing the short, but under 429, 428.30, we can see moves into 427, 60, 50 area. Under that, then we're going to be looking down into the 426, 425, 75 zone. So that's kind of the range I will be watching from this perspective. Other than that, one other thing I did want to go over before we closed out the video, I want to take a look at rates really quickly, as they are still super important right now in the market. Let's bring up the 10-year. Now, one thing is I will be watching, we had a little bit, obviously a huge gap up after FOMC. I'm going to be watching this trend channel, though, that we have been trading in. If by chance we do, kind of right now we're in no man's land, but I'll be watching to see if we do continue higher. I'm going to see if we do get any price reaction, or if we do start to come in here, I will keep an eye on that. But right now, as it stands, kind of in no man's land. But I wanted just to point out this channel that we are staying, that we have been trading in. I mean, really, to come back down, even test the 9, wouldn't even be bearish, obviously, in any sense here. We are definitely extended from all the moving averages. So some type of a retracement down. This move is a little bit exaggerated, or a little bit extreme. So even coming down into here and then making a move back up, or coming down and maybe even testing this trend line and then coming back up, we could see maybe we reject and break the trend line, come back up and come back down. That would be an ideal kind of scenario for the bulls. But maybe from here we come up, and then we come back down, retest it, and then come back up from here. So that's a scenario that would be a bearish case. But all those could potentially play out. We'll have to see. This kind of, there's a lot of a huge gap here, so I'm not really exactly sure how this is going to be worked out. But we will keep an eye on that. But I think that this uptrend channel will be important to watch to see if we do end up breaking it or holding it. To see this move overall continue. Last thing I wanted to go over before we close out the dollar, and I really should have done these earlier, so I do apologize, but nevertheless important. Whoops, okay, I'm not trying to trade that. Okay, so I'm kind of watching, and I don't think I went over this on the video. Did post about it on my Twitter, if you're not following me, @_shark_trader. But we were watching this kind of bull flag here form. We did get the breakout here. I'm still watching. My ultimate target was 405.87, I'm sorry, still speaking in spy language. Sorry, 105.87, 106 area. Didn't quite get there yet, but I will still watch. We're still over this key area here at the 105.40, so possible that we see a little bit more consolidation like this, and we actually do get that final push just up into this area here, hitting that final target. And we'll see how price reacts when we do come up into there. But that's going to be pretty much the high of March. So it'll be interesting to see what happens when price comes kind of into this potential double top. Will we get a slowdown? I don't know, but hopefully the bulls would want that. We want this to cool down. Can start to make a case, though. This is getting this rate of attack here. The angle on price is getting very, very steep. So we will also be watching, that potential right? And here's kind of something that could be encouraging for the bulls. And I get a bit of a rising wedge here, ascending wedge, but only valid if we start to break this trend line and then start to create a new trend and a lower high. So, but we'll keep an eye on this as well as we possible ascending wedge into this major area of potential double top. So this is definitely important to keep an eye on. All right, gang. Well, that's all I've got for you. I hope you found this helpful. And I really appreciate, again, everybody for coming, supporting the channel, viewing these, prepping for the market with me. Remember, a prepared trader is a profitable trader. So plan your trades, trade your plan, and I will see you midweek. All right, take care.